Welcome to the exciting world of the stock market. The stock market is a dynamic and ever-changing environment where fortunes can be made and lost. It's a place where companies raise capital to grow and investors seek to build their wealth. It might seem intimidating at first, but don't worry, I'm here to guide you. Whether you're a complete beginner or someone with some experience, there's always something new to learn. The stock market can be complex, but with the right guidance, you can navigate it successfully. We're going to break down this complex world into bite-sized pieces. We'll start with the basics, such as understanding what stocks are and how the market operates. Then we'll move on to more advanced topics like analyzing financial statements and understanding market trends. Get ready to learn the basics and some valuable tips and tricks. We'll cover essential concepts like diversification, risk management, and the importance of having a long-term investment strategy. You'll also learn how to read stock charts and use various tools to make informed decisions. By the end of this, you'll be well on your way to becoming a savvy investor. You'll have the knowledge and confidence to make your own investment decisions and build a portfolio that aligns with your financial goals. This isn't about getting rich quick schemes. The stock market is not a place for gambling or chasing quick profits. It's about making informed decisions based on research and analysis. Avoiding scams and understanding the risks involved is crucial. This is about building wealth over time. Investing in the stock market is a long-term commitment. It's about patience, discipline, and staying the course even when the market is volatile. Over time, with consistent effort and smart choices, you can grow your wealth significantly. Remember, investing in the stock market involves risks, but with the right knowledge and approach, it can be a rewarding experience. We'll teach you how to assess and manage these risks effectively. By understanding the balance between risk and reward, you can make better investment decisions and achieve your financial objectives. Imagine a giant marketplace where companies sell tiny pieces of themselves. These pieces are called stocks or shares. When you buy stock, you become a part owner of that company. You're putting your money into their business, hoping it will grow and become more valuable. The stock market is where these stocks are bought and sold. It's like a giant auction happening electronically. The prices of stocks go up and down based on supply and demand. If more people want to buy a stock, the price goes up. If more people want to sell, the price goes down. Let's step back in time for a moment. Imagine a bustling room filled with men in suits, shouting bids and offers, the air thick with anticipation and excitement. This was the scene of early stock markets, where fortunes were made and lost in the blink of an eye. The stock market has been around for centuries, serving as a cornerstone of economic activity. It has witnessed the rise and fall of empires, the birth of new industries, and the relentless march of progress. Did you know that one of the earliest examples of a stock market was in the Netherlands in the 1600s? In the bustling city of Amsterdam, merchants and traders gathered to buy and sell shares in the Dutch East India Company, one of the world's first multinational corporations. But it wasn't just shares in companies that were traded. People were buying and selling tulip bulbs. Yes, tulips. This period, known as tulip mania, saw the prices of tulip bulbs skyrocket to astonishing levels, only to crash spectacularly. It sounds crazy, but it shows how the idea of investing in something and hoping it increases in value has been around for a long time. The frenzy over tulips was one of the first recorded speculative bubbles, a phenomenon that has repeated itself throughout history. Over the centuries, stock markets have evolved and become more sophisticated. From the open outcry pits of the past to the high-speed electronic trading of today, the mechanisms may have changed, but the essence remains the same. The basic principle remains the same: to connect investors with companies looking for capital to grow their businesses. This symbiotic relationship fuels innovation, drives economic growth, and creates opportunities for wealth generation. Fast forward to the late 20th and early 21st centuries, and we see the rise of the tech industry. Companies like Apple, Microsoft, and Amazon have transformed the stock market landscape, creating new opportunities and challenges for investors. However, with great opportunity comes great risk. The dot-com bubble of the late 1990s and early 2000s is a stark reminder of this. Investors poured money into internet startups, driving stock prices to unsustainable levels, only to see them crash when the bubble burst. Today, the stock market continues to be a dynamic and ever-changing landscape. With the advent of new technologies, the rise of global markets, and the increasing influence of individual investors, the future of the stock market is as exciting and unpredictable as ever. Whether you're a seasoned investor or just starting out, understanding the history and evolution of the stock market can provide valuable insights. It reminds us that while the tools and players may change, the fundamental principles of investing remain constant. So, as we navigate the complexities of today's financial world, let's remember the lessons of the past. From tulips to tech bubbles, the stock market's journey is a testament to human ingenuity, ambition, and the enduring quest for prosperity. The stock market has seen its fair share of ups and downs throughout history. From the early days of Wall Street to the modern era, the market has been a roller coaster of fortunes made and lost. Remember the Great Depression in the 1930s? It was a time of unprecedented economic hardship, not just in the United States but around the world. The stock market crashed, and many people lost their life savings. Banks failed, businesses closed, and unemployment soared. Families were left destitute, and the social fabric of the nation was stretched to its limits. It was a stark reminder that investing in the stock market carries risks. The euphoria of the Roaring '20s had given way to the despair of the Great Depression, showing how quickly fortunes can change. Fast forward to the late 1990s and we see another dramatic episode in financial history, the dot-com bubble. This was a time when the internet was revolutionizing the world, and everyone wanted a piece of the action. Investors got caught up in the hype surrounding internet companies, and stock prices soared to unsustainable levels. Companies with little more than a website and a dream were valued in the billions. When the bubble burst, many investors lost a lot of money. The market correction was swift and brutal, wiping out trillions of dollars in market value and leading to a wave of bankruptcies and layoffs in the tech sector. These events teach us valuable lessons about market cycles and the importance of making informed investment decisions. They remind us that while the stock market can offer great rewards, it also comes with significant risks. Understanding these risks and staying informed can help investors navigate the turbulent waters of the financial markets. Today, we continue to see the impact of these historical events on our financial systems. The lessons learned from the Great Depression and the dot-com bubble have led to more stringent regulations and a greater emphasis on financial education. Investors are now more aware of the importance of diversification, risk management, and due diligence. As we move forward, it's crucial to remember the past. By studying these significant events, we can better understand the dynamics of the market and make more informed decisions. The stock market will always have its ups and downs, but with knowledge and preparation, we can navigate its challenges more effectively. In the end, the key to successful investing lies in education, patience, and a clear understanding of one's financial goals. By learning from history, we can build a more secure financial future for ourselves and for generations to come. Section 5, Tip 1, do your homework. Research is key. Before you buy any stock, it's crucial to do your research. Don't just buy something because you heard it was a hot tip. Look into the company's financials, understand what they do, and consider their future prospects. What are their revenues? What are their profits? Who are their competitors? Think of it like buying a car. You wouldn't just buy the first car you see without checking its mileage, engine, or safety features, would you? The same principle applies to investing in stocks. Section 6, Tip 2, don't put all your eggs in one basket. Diversify. One of the golden rules of investing is diversification. Don't put all your money into just one stock or one sector. Spread your investments across different companies, industries, and asset classes. This way, if one investment doesn't perform well, you won't lose everything. Think of it like this. If you drop a basket with all your eggs in it, you'll break them all. But if you spread your eggs across multiple baskets, you'll minimize the damage if one basket falls. Section 7. Tip 3, stay informed. Knowledge is power. The stock market is constantly changing, so it's essential to stay informed about market trends, economic news, and company-specific developments. Read financial newspapers, follow reputable financial websites, and listen to podcasts. The more you know, the better equipped you'll be to make sound investment decisions. Section 8. Tip 4. Patience, my friend, patience. Investing in the stock market is a marathon, not a sprint. Don't expect to get rich quick. Be patient, and don't panic sell if the market takes a dip. Remember that stock prices fluctuate in the short term, but over the long term, the market tends to go up. Think of it like planting a tree. You wouldn't dig it up every few days to see if it's growing, would you? You need to give it time to take root and flourish. Section 9. Tip 5. Seek professional advice. If you're feeling overwhelmed or unsure about investing, don't hesitate to seek professional advice from a financial advisor. They can help you create a personalized investment plan based on your financial goals, risk tolerance, and time horizon. Remember, it's always better to err on the side of caution, especially when it comes to your hard-earned money. Section 10. Conclusion. Your journey to financial freedom. Congratulations on taking the first step towards investing in the stock market. Remember, investing is a journey, not a destination. There will be ups and downs along the way, but with patience, discipline, and the right knowledge, you can achieve your financial goals. Start small, learn as you go, and don't be afraid to ask questions. The world of investing awaits. Section 11, Disclaimer. I'm not a licensed financial advisor. The information provided in this essay is for educational purposes only and should not be considered investment advice. Investing in the stock market involves risks, and you could lose money. Before making any investment decisions, consult with a qualified financial professional to discuss your individual financial situation and goals.